Welcome everybody to this exciting session on crypto. And my name is Lisa Beyer. I'm the founder of Female Disruptors. And today I want to warmly welcome Erin Holloway. So Erin has spent the last 30 years of her career in international banking, finance, fintech, and crypto. And she is here to talk to us about getting comfortable with crypto during this uncomfortable financial times that we are in. So Erin, welcome. And can you share a little bit more about your background and how you fell into the crypto space?
Thank you, Lisa. It's so good to see you as always. So 30 years sounds like a long time, doesn't it? But it goes by so fast. I did start straight out of undergrad in traditional finance. I worked for a big global investment bank, one of the biggest, and did a lot of things in 20 years, as you can imagine. And worked my way up through credit analysis, traditional banking, domestic treasury, foreign exchange, international treasury, international banking, lots of different things that you can do in that time, and into some of the tech space that the bank was actually starting to get into, which was pretty exciting. And then I used that as a springboard into one of the big global tech companies, like the biggies, the mega big tech companies, one out of Germany. And spent 10 years there working with their networks and connecting buyers and suppliers in terms of how they do business together and all of the technology that you need to support that process. And then about a year and a half ago, I made another leap into a crypto fintech financial company as president and treasurer, and that's been super exciting, as you can imagine, in these fast times. And a year in crypto is equal to like 7 years in any other industry, as you can imagine. But it's a very exciting place. It's evolutionary. There is some kind of tumultuousness about it in terms of what's been going on in the last year, and I'm sure we'll talk about it. But I'm really excited to be here with you today, and that's how I found myself in crypto.
Yes, and I mean, it sounds like it's definitely been a long and very a lot of experience under your belt. But I think one of the messages that we want to get across in this session and Female Disruptors in general is that you don't need 30 years experience to educate yourself in money and crypto today. And that's what we're here to share with you, is that we want to bring more women into crypto and have more women feeling comfortable being uncomfortable, not just in crypto, but even with their financial planning and their personal financial planning independently. So with that, let's just start with the basics, Erin. What is cryptocurrency, and what are digital assets and NFTs, and what are the differences between those three?
Yeah, it's interesting. We should start with some basic definitions, right? Because the point is to educate women and get them comfortable. And one of the things is you just don't know, right? You just don't know what you don't know. So let's start with some general terms. One is digital assets. Like what are digital assets? Well, that's a very broad umbrella term, basically for anything that is created and stored digitally. It's identifiable and discoverable, and it has or provides some type of value. Right. So when we talk about cryptocurrencies or coins or tokens or NFTs, those are all digital assets. They're in their own way because they have those qualities. So the biggest one is obviously going to be cryptocurrency as a digital asset. And it's a digital currency in which transactions are verified and records are maintained by a decentralized system, right, using cryptography, which is why it's called a cryptocurrency, rather than like a centralized authority. And by centralized authority, I mean like the central bank, right, which we know as the Fed, regulates on a centralized basis. This is on a decentralized basis. There's no physical currency like dollars or coins, that you can trade in the open market, which is called fiat currency. And that's what the Fed regulates, right, is our dollars and our coins. Although some of that's a little changing a little bit, but for now, it's digital. And the most well-known is going to be Bitcoin and Ethereum. Those are the two biggies, as we call them. But there are thousands of crypto coins and tokens. They're mined on a blockchain by solving a series of complex mathematical equations with computer systems. So, and generally they use a lot of energy. So there's a lot of criticism around that. But Ethereum recently changed the way they do their mining to eliminate almost all of those energy costs. So then what is a blockchain? If it's mined on the blockchain, like what is a blockchain? Well, that's a distributed, decentralized database that maintains a continuous and growing list, right? Things are being mined all the time and added to the blockchain with records called blocks. And the blocks are links using the cryptography. So each block contains a cryptographic hash of the previous block, like a timestamp and a transaction data. So when the cryptocurrency is moved or changes ownership, there's a record of where it was, where it went to, almost like, think about it like a passport stamp as you cross the border. You got a passport stamp on your way out of the country, you got a passport stamp on the way into the country as it moves along. And so you can track it. And then NFTs, that's your favorite, Lisa. I know you're a big fan of NFTs and the art world, right? That's a non-fungible token. And most people know it as part of the art world, right? Digital art. And it's a unique digital identifier. It cannot be copied. It can't be substituted. It can't be divided. And it's recorded on the blockchain, right? Just like the others. And it's used to certify authenticity of ownership, which is why art is such a good application for that. Because people, want to own originals, which is pretty important in the art world. Now, what you choose to do with that piece of art and how you choose to utilize the image of that piece of art is up to you as an owner, but you always own the original. Like Bored Ape Yacht Club is a very popular one. Everybody seems to see and know. And then stable coins. Stable coins are cryptocurrencies that are pegged to their market value to some external reference, like a US dollar or a euro for the most part. There's some that are pegged to other things, but they're also pegged to potentially the price of a commodity, like gold is one that it could be. And then there's wallets. Like wallets is where you store it, right? Just like your regular wallet where you hold your regular currency, you can have a wallet for all your cryptocurrency and your digital assets. And it can be a hot wallet or it could be a cold wallet. And a hot wallet means it's readily available, it's easier to get to. It's like on a phone or a computer, whereas a cold wallet is kept offline. Like it could be in a UBS port, USB port. That would be a cold storage solution. And then there are a lot of definitions that we don't even have yet, Lisa, because crypto started out as a revolution against the cost of big bank transactions. And it's now become an evolution that still does have some maturing to go. But the clarifying definitions that need to be assigned to the cryptocurrencies have to do with regulation. Like, are they currencies like a dollar and a euro, because the value can go up and down, based upon supply and demand? Are they commodities? Because you can hold them like gold, and have mined them like gold, like commodities are. What are they? And some have characteristics of more than one. So, it's difficult to say how the politics are going to shake out, but there are some definitions that we still need to assign in the space. But that's starting with some of the basics. I'd like to go there.
Yeah, and I think it also is reminiscent of, the early, internet days when Google and, all the different search engines were coming out onto the scene, and social media, Facebook and LinkedIn, and all this new terminology started coming about. So it's reminiscent of that as we enter into this Web3 crypto world. But so these are definitely crazy times. We've had crazy headlines, roller coasters. Like, a year ago, everybody was so hot on Bitcoin and ETH, and NFTs were, at their height. I bought a Boss Beauty NFT about a year ago, and it definitely was at its all-time high. I still have my Boss Beauty and I love her. But what's going on with all the headlines, and what is your analysis and what we're seeing?
Yeah, I would say the noise really started in Q2 of 2022. And you're right, a year ago, we were cruising along. Prices were high, volumes were high, and the market's basically lost about 70% of its value in the past year. And there's a lot of things that have happened in a year. I mean, like I said, 1 year in crypto is equal to like 7 years in any other industry. And
Definitely.
what's gone on in what we now are terming the crypto winter is no exception to that rule. The first thing that happened was that we had a cryptocurrency that was supposed to be a stable coin, an algorithmic stable coin. It got knocked off its axis, right? So when things are spinning and you keep the balance, things are fine. But when it starts to wobble and you get out of control, that's when you can fly off of the axis, and that's what happened with Terra Luna. And it was caused by that algorithmic stablecoin getting off of its balance, and so it was pegged. And that peg got depegged, and so the value started to go less than 1-to-1, and that's a problem, as you can imagine. And hundreds of $1 million was quickly liquidated because the value was dropping, and so it was depegged, and there wasn't enough cash to do 1-for-1 on redemption, and there was a huge loss of confidence in the coin, and it basically crashed. And it was a hard lesson in the crypto world. It was a hard lesson, and consumers are still recouping what they can from that destabilization. They're probably going to get about 30 cents on the dollar when it's all said and done. So that was the first thing that happened. I think that was about May 7th. But then throughout the summer, without going into specifics, other companies' exchanges started to wobble from some of those aftershocks. There was a crisis of confidence in the market, and consumers started to pull out because they wanted to make sure that their money was safe. Totally normal. I mean, it was a modern day run on a bank, so to speak. And this caused a drop in, most of the coin prices. Bitcoin and Ethereum were no exception to that rule. And we're down to about $17,000 for Bitcoin and about $1,300 for Ethereum. When Bitcoin was at a high of 60,000 ish,
Yeah.
and Ethereum was 4,000 ish.
Yeah.
So that's a big drop. So when we say 70% across the board, those numbers kind of jive in there. But we've seen this in larger markets, right? The stock market has had these types of wobbles and crisis of confidence. So it might be new in the crypto world. It's certainly not new in the world of finance, right? These things happen. Contagion does set in as consumers lose both confidence and money. But that's what makes markets, right? They move and they change, according to what's been going on over time. Now, the biggest headline, and it wasn't the first, but so far it's been the worst, is FTX. And so let's unpack that a little bit, because it's kind of the poster child for kind of what could go wrong when you don't have regulation in place. So FTX is only 4 years old. It was started in 2019. It's a young company. And I think they had up to something around 135 different legal entities. Without regulation, kind of how can you break the rules if there are no rules? Is kind of what the problem kind of came down to. So within 10 days in November, there was a little bit of a house of cards that started to fall. Similar to Terra Luna in that there was a connection with a token that FTX created. It was being used by a sister company, which was a hedge fund. And there's something called rehypothecation, which is taking your customers' assets that they're putting into you as collateral, let's say, and then using them as your own collateral. And that's what was going on. There was rehypothecation happening. And so when you use somebody else's money as collateral, but when the market shifted and started to slide backwards, the value of that collateral isn't where it used to be. So you can have something very similar to what we have a margin call. If you're pledging stocks as collateral and the value of the stock goes down, cryptocurrency is no different. But you pledge cryptocurrency and the value of cryptocurrency goes down, you're gonna have a margin call. They couldn't meet their margin call when a very large investor wanted their money back. And so it kind of opened up kind of the can of worms to say, hey, what's really going on here? And when it was all said and done, I think they're short about $3.8 billion. And that's a lot of money. It's a lot of consumers affected, and that'll have to be unwound as well. Very similar to Terra Luna. So Terra Luna has a plan. This one's a little bit different because the bankruptcy courts are involved. But there is a silver lining to what's going on with FTX, and that's that it's going to hasten regulation. Because when you have such a new industry, it takes time for regulation to come about. And it's going to hasten that. And there are a lot of politicians lobbying different laws to, like I said, is it a commodity? Is it a security like a stock? Is it a utility? In that regard, like what is cryptocurrency and how do we regulate it? And this is the one silver lining, is it is going to hasten that process, because we do need consumers to be protected. So similar to credit card regulation, we have CPI standards that protect consumers when they use their credit cards. We also have FDIC insurance on bank accounts. So if I have up to $250,000 in a bank account, and that bank goes under, I'm protected up to $250,000 because that bank had FDIC insurance. We need these types of consumer programs and regulations out there to protect consumers so that they can invest in crypto with confidence. They can utilize it, and it can start to evolve in new and exciting ways so that finance can go to that next level. And we can continue to evolve our financial institutions and methodologies.
Wow, that's so much to take in, but at the same time, it's not something that we need to ignore. So we're about halfway through the session. How can women get comfortable with crypto when all this is still happening and probably is not going to die down anytime soon? What are some key things that women need to really look at now?
Yeah, these are uncomfortable times. Absolutely, for everybody. And it's not just the crypto market, right? It's regular financial markets as well, on a global scale. Just because we've got outside influences like the war in Ukraine, inflation in the US. A lot of this started out because of supply chain disruptions from COVID. And then you've got an imbalance in supply and demand. Whereas we got very cozy and comfortable in the past 20 years with low interest rates, low unemployment. Yeah, we had, a crisis, here and there. We had the housing crisis in 07, 08. But for the most part, on a grander scale, things were humming along. Interest rates have been low for a really long time. They haven't been above 10% in 25 years. This is a great time to educate yourself on crypto, right? Get comfortable with what the investment options are. Crypto is just one more investment option. You never want to put all your eggs in one basket. But it is something to start considering. And the crypto market has predictions of going up to $250,000 per Bitcoin this year, as well as dropping down to $10,000 per Bitcoin. No one has a crystal ball, so this is a great time to do your self-education in that regard. Do talk to your registered investment advisor, or find one that can help guide you with crypto. And unless you have a career in finance, like most people, need help with learning about and actively investing. You can use dozens of apps. They've made it pretty easy. You can even use PayPal, for example. But you need to educate yourself on what you're interested in potentially buying or investing in. Like, do I want to use my retirement funds and put a small percentage of my retirement funds in crypto as one more option, with my stocks and bonds and funds as an option? Do I want to actively invest and be more aggressive and trade on an active day-to-day basis? How do I want to hold that money? Do I want to hold it at an exchange? Do I want to hold it in a hot wallet? Do I want to hold it myself in a cold wallet? Use this time to figure all those things out. And again, we're going to see, I would be surprised if it doesn't happen this fiscal year. We are going to see some regulation come to give consumers more confidence in the marketplace and how to get more comfortable with the idea of actively doing it. Because how do you get comfortable? You start with something familiar, like an investment account, right, for your retirement, like a credit card. I'm used to rewards, right? Hotel rewards, airline rewards. There are credit cards now that have crypto rewards. That's a great way to get started with something familiar, right? That's what's going to help the masses adopt it, is if they take that baby step with something familiar. And those are two examples of things that that people are already very well familiar with.
Yes, totally. And I mean, one of the things that I do, it's a little bit more complicated than buying it with PayPal, but if you can manage to get Coinbase account set up, I just do dollar cost averaging every week, and I just invest $20 a week in either ETH or Bitcoin or some sort of crypto. And it's something that if I lose it, it's, I'm not going to miss it necessarily. So doing something like that you can afford to lose and not try to time the market.
Yeah, absolutely. Like I said, nobody has a crystal ball. You absolutely cannot figure. Like I said, could go up to 250,000, could go down to 10,000. It's at 17 right now. It's more about your long-term investment strategy. And again, working with a registered investment advisor is a great way to get the guidance. And it all depends on your appetite for risk and your timeline. Younger generations are far more comfortable with crypto and the concept of coins, video games even. That's a great way that the younger generation has learned the concept of coins and value and digital assets with the video game industry. So the younger you are, I think the more natural it feels, and the older you are, the further away you are from it being kind of inherently natural.
Why do you think that why don't more women get into crypto in general? And what advice can you give them to join the crypto community and learn more?
I think because they don't know what they don't know. It's a lack of education, right? I think my one piece of advice that I can give women when it comes to crypto is don't be overwhelmed. It's easy to get overwhelmed. Don't be. Crypto is just digital value. It's just digital value. Like in the 50s, people learned how to use credit cards. That was new in the 50s. In the 70s, ACH came around and people started getting direct deposit on their payroll. In the 90s, we learned how to use the internet, right? This is no different. It's just the evolution of money and technology together. So just educate yourself, know and understand the risks and opportunities that crypto offers, because it's not going away. It's going to continue to change. It's going to evolve in new and creative ways and have new and exciting uses. But understand it, decide if it's right for you, measure your tolerance for risk, and make fact-based decisions with your money.
Yeah, I love that. And just in general, I mean, we've had these talks offline, and last year you did a session about women in money and finance. And, just in general, we see women not being as involved, even in their own, financial planning, much less if they're in a relationship. So what's some advice in general, just to kind of like bring it to a higher level when it comes to women in money and, some mistakes that you see being made, and what advice you would give for women to make sure that they have their financial kind of well-being in mind?
Yeah. I say the biggest mistake is being passive and thinking that somebody else is going to handle it for you. Like, oh, my partner's going to handle it for me. Well, life changes. Life can change very quickly. And it's better if you are aware and knowing what's going on with your money and your family's money, before, something happens and you suddenly, it's baptism by fire and you're like, oh my gosh, I've got to get this figured out. It's better if you are aware of those decisions and, where your finances sit all along. Because, things just happen, life happens, and you don't want to be caught off guard. I've known a lot of women who've had some type of change in life. They've lost their partners through death. They've lost their partners through divorce. And suddenly they're on their own and they weren't planning on being, and they let their partner, they passively let their partner take over that. And they just didn't know. They didn't know where the money was. They didn't know what it was being invested in. They don't know how much there was. They didn't know how much their mortgage payment was. They didn't know, do we even have a car payment? I don't know. They just don't even know. It's not to say that you have to take it over, but you need to be aware, and not necessarily consulted if that's not your forte, but you need to be given the opportunity to have the knowledge. Nobody should be unaware of what's going on with they and their family's money. It's just good. It's good dynamics. It's good financial health is to make sure you've got that knowledge and awareness.
Yes, and I want to end kind of on one theme that you mentioned earlier, that you mentioned that crypto is just one type of investment. And, I just kind of want to end on the note of diversification and how that is so critical. And for example, those that were all in on crypto last year and maybe, too much in where they didn't diversify, they, were hurt. And so like what my husband and I do each year at the end of the year is we do like a pie chart and say like, okay, like what percentage is in, equities, real estate, crypto, for example, or, whatever the different buckets are. So what advice, you touched on that crypto should just be one part. What advice do you give on diversification?
Yeah. So I don't want to give personal advice.
Oh,
But
not
I feel
personal,
that,
yeah, not
yeah,
financial advice, but just
yeah, I don't want to give
diversifying in
financial
general.
advice. Never put all your eggs in one basket, just
Yeah.
as you said, Lisa, right? I know that they're Bitcoin maximalists, that they're all about the Bitcoin, right? They're 100% on the Bitcoin. And that's a decision that they've made. But I'm a big believer in that you have a tolerance for risk, and everyone has their own tolerance. And it's better to diversify because you just never know. Yeah, you could take it to the moon, as a lot of people call it and say it. Crypto is going to go to the moon, but it's not at the moon right now. It might be someday, but it's not at the moon right now for most people, unless you got in like early days. We're not quite at a moonshot. So diversification, and constantly check up on it. Don't set it and forget it, because markets are constantly changing and moving, and that's something that you need to, you got to check in, just like you check in with your physical health, you check in with your financial health on a regular basis.
Yes, and I think just in general, whether we're talking about, crypto or money, but in general, whether it's work or life, with, when diversification comes innovation. So the more you're diversified, the more opportunity that's going to come in general. So this is not financial advice, underlining that. If anybody has any quick questions, we're about to wrap up here with our session with Erin Holloway, talking about getting comfortable with being uncomfortable in crypto. But I have a question here from Marlene. She says she has seen on the news about horrors of someone's cryptocurrency account has disappeared. What are the chances of that happening in general?
Well, it's hard to say what the chances are, right?
Yeah.
It's absolutely possible, and we've seen it happen. Same thing happened with Bernie Madoff, before. And they're absolutely shysters in all aspects of, where money is concerned. Wherever there's money, the bad guys are going to follow. Like we used to see at the bank, we used to see tons of credit card fraud, and then crypto came around. And then it starts to move, like all the bad guys go towards crypto, right? Because that's the new opportunity. They're just going to move where the newest thing is. So the opportunity is absolutely there. There are a lot of large institutions, though, very reputable companies that are getting into that space. Fidelity, for example, is starting to offer crypto as an option in their retirement funds. JP Morgan is launching a coin that their customers can use to make transactions with other JP Morgan customers. The large institutions are getting into it. It's again about doing your homework. Find somebody who's reputable. The possibility is always going to be there. Nothing is zero risk. That I can tell you. Nothing is zero risk.
Yeah, and there are ways to deter and protect yourself. And, as long as you're checking all those boxes, but like you said, nothing is 100% secure. I saw that Fidelity is coming out with crypto opportunities, and there's also a bunch of funds that are coming out, I heard, either this year or next year. So definitely, if you want to play it super safe, stick with, the safe institutions, and then just making sure that you educate yourself. And for example, you have the cold storage and, set up so that you're protecting yourself as much as possible. You have that seed phrase, you're not giving out that seed phrase. These are all common mistakes that contribute to when you can have your account disappear or have everything drained from your account. Your account isn't really disappearing, just your funds are.
Yeah.
Which sucks.
Well, and they're getting locked where you can't get them. Even Kevin O'Leary from Shark Tank lost the keys to one of his wallets. Yeah. And he's like, I've done it once. I'll never do it again. Right. Lessons learned. I mean, even really smart financial people have lost the keys to their wallet. So, you know, making sure you've got everything buttoned up from a security standpoint, and you don't lose those keys or that passphrase, whatever it might be, is critical.
Yes, and if you also want more information about setting up your digital wallet, setting up some of these storage, cold storage types of for your assets. So there are other sessions. Michelle Abbs is hosting one of the sessions that is part of this Female Disruptors Virtual Summit. So definitely check out hers for more details on what to do to protect yourself. But Erin, I want to thank you so much I feel more comfortable about being uncomfortable with crypto, and hopefully everybody else does. So thank you so much for being a female disruptor.
Thank you so much, Lisa. It's an evolution and the journey continues.
Thank you. Thanks everybody for joining us, and get ready for your next session.
Thank you.